Gagan Banga now joins us. Let's connect with him to understand what is the way forward for India Housing Finance, the fact that they have sold portion of their stake in OakNorth Holdings. Gagan, good morning. Thank you for joining us. First, can you walk us through the transaction, because this is a series of transactions which you've done in OakNorth Holdings?
Yeah, so good morning. We had invested in 2015 for a stake of 40%, and over the years we have been slowly monetizing our investment, which has given us over 5.5 times return in the last 5 years. So as we speak, we've now kind of completed the short-term monetization plan. And we've raised around 1,800 crores through that process in the rounds that we did this time over the last 60 days. The idea was to get to about 2,500 crores of equity capital raise, which we did between our stake sale in OakNorth as well as a QIP. And with our capital adequacy well north of 30% today, we think from a capitalization level, we are extremely well positioned for growth going forward in the asset-light model that we've been working on for the last year or so.
But Gagan, do you really need to have this kind of an capital adequacy, 30%? Because some would say that you're selling family silver to take your capital adequacy higher. So is this a sign that you're raising a lot of growth capital, or you're preparing a balance sheet for a big write-off?
We are preparing for growth. We've already indicated that whatever higher levels of provisioning we had to do, we did that in Q4 itself. So I think we are fairly well provided as we speak. We also continue to guide the market that we will continue with about 50% of our pre-provisioning operating profits going into incremental provisions, and that would result in an overall provision stock, which is very, very comfortably placed and at almost about 6% of our assets. So this is merely growth capital. We needed to send out a strong message from a growth perspective to various stakeholders, such as rating agencies, banks, and other debt providers, etc., which we are trying to do. So what we definitely wish to do is keep our capital adequacy very high through the next phase of growth, as well as continue to maintain our liquidity buffers, which are at about 15% of our loan book.
Gagan, now earlier you had mentioned that the company expects an AUM growth of 10 to 12% this year. Are you on track for that? And where do you see a large part of your growth coming from?
On an incremental basis, the business has completely turned the corner in terms of our focus is purely retail. By retail, I mean retail home loans and loans against property. That's what we are incrementally focused on. The model is we are trying to do some bit of co-origination with two of the bank relationships that we have, and the other we are directly booking on our balance sheet and then securitizing it with banks. So that business model has now reached a degree of scale and maturity. The disbursals in terms of scale have started picking up from August, September. In the third quarter, we will see more scale-up happening as the demand for residential real estate is coming back. There is a lot of data out there besides the personal experience that the residential real estate cycle has clearly turned the corner, especially for apartments which are completed. So my sense is that 10% sort of a AUM growth, which we've guided for coming through in the second half of the year, is quite doable.
Okay, fair enough. And, your disbursements as well has seen an uptick on a month-on-month basis. What has been your disbursements till the month of September, and how far are you from those pre-COVID levels?
Yeah, so we are at about 75% of pre-COVID levels on a YOY basis. And my sense is that by the fourth quarter, we should be between 90 and 100% of of pre-COVID levels. So quarter 4 fiscal 21 to quarter 4 fiscal 20 should be in a 90 to 100% comparable range on the retail disbursal side. So what we are focusing on doing is only doing such home loans where we clearly know that these are securitizable loans. It's a pure retail distribution framework that we are trying to get to the next level, and one is confident that we should be able to get to disbursal levels of something like 2,000 crores a month for fiscal 22 on a monthly average basis.
Again, given the increased competition in the affordable housing space, what's your strategy in order to dominate, your presence, expand market share?
Yeah, I actually believe that the asset side competitive landscape is has actually moved in the opposite direction. The competitive landscape is today extremely benign. What the industry is seeing is deep consolidation in the lending space. Through the period of 2010 to 2014, there used to be just 4-5 players in the HFC industry who were dominating the home loan disbursals. That competition picked up. There were quite a few new entrants through the period 2015 and 18, and now we are again back to just 3-4 of us competing for the space. So the competitive landscape is very benign. The other big change in our approach to business this time around is we are looking to completely collaborate with banks. We want that banks should think of us as an extended arm to get them good retail loans, which otherwise to be accumulated at a scale is often found to be difficult, which is why the full focus of the management is on forging banking relationships, creating a collaborative model, and making sure that we are able to give a very, very competitive offer to the good clients on the street. The other big competitive advantage that the company has is over the last 4 years, we have fine-tuned our digital model. In 2016, we had created the country's first e-home loan solution, which since then has been fine-tuned and is today a very, very efficient and successful product. That keeps our operating expenses also extremely low and makes the model very scalable. So till the time that we focus on this collaborative approach with a digital background, I think we will be able to offer to our clients a very cost-competitive offering where we also turn around the client's application in a span of 1 or 2 days. That's a pretty good home loan offering and will allow us to get good scale, which we are already seeing.
Great. Are there certain geographies or pockets or product mix wise, segments where you're seeing greater traction and that you're going to be focusing on?
So we are, in that sense, a single product company. We focus on the smaller retail loans of up to 30 lakh of rupees, and most of these loans are done more in tier 2 to tier 4 kind of locations. Therefore, the cost of distribution becomes extremely critical, and that's what we are focusing on. So while the larger centers are good to act as credit hubs, and the suburbs of these larger centers do provide with reasonably large business, but on a more incremental basis, one is seeing greater traction coming from tier 2, tier 3 kind of locations, and that's what we are focusing on. So our single-minded focus would remain on home loans of up to about 30 lakh of rupees.
Gagan, let's address the question from a shareholder standpoint of Indiabulls Finance. Shareholders are saying that with the recent changes at the board and with what is happening in the company, who's going to be the driving force for Indiabulls Finance now, or Indiabulls Housing in this case?
Indiabulls Housing has forever been an organization which has been run more by professionals, which is me and my team. The process of institutionalization of the board has been ongoing for the last few years, and the recent change at the level of the chairman is a process of continuing that institutionalization. We believe financial services organizations, after a certain scale, have to have a fine line between ownership and management, and that's what we are trying to do. Samir will continue to remain a very large shareholder. He is the largest shareholder of the company. He has not sold any share ever, and his idea is to try and maintain his shareholding at above 20% levels. So we will continue to drive the company. The second level of institutionalization also is to ensure that now we have a few very illustrious professionals on the board who guide us on a day-to-day basis. The next level is to also get some shareholder representation. We are largely an institutional shareholder-owned company. So some of these institutional shareholders need to have representation on the board, which we are working on. So either someone who has a large shareholding or other professional board members who can represent these institutions directly. That's the next level of institutionalization, which we will be doing. So the work at the board level will continue, and the management will continue to drive the company.
All right, Gagan, appreciate your time. Thank you for joining us. Peter McQuarrie joins us now, and China will be coming out with their GDP data. Peter, good morning. Thank you for joining us.